My name is Dee from Nairobi, Kenya. First and foremost, before I make my question to you, Michael, just to appreciate you for the immense contribution that you've made to the community. So my question to you, Michael, I was watching your breakdown yesterday, and you were talking about first stage reaccumulation, second stage redistribution. And got me thinking because I've been looking at it for a very long time, and I wanted to know how do we measure in terms of how much the price is going to retrace in terms of the reaccumulation, and how deep it's going to retrace before we have the second stage distribution. So just a simple question. Thank you, sir.
Okay. When you're looking at, well, let's frame a hypothetical example. Say we're bullish. We're looking at a 15-minute time frame, and say it's the NASDAQ. It could be any market, but say just for the purposes of mapping it out, because we don't have a whiteboard here, and I'm not over the top of a chart. It's a 15-minute time frame. It's NASDAQ, and it's traded down to a old weekly low. It's already repelled away from that. It's traversed higher. It's gone back up above the high in the last 3 days. So we've already seen purge and revert. Not that has to happen. You could still be waiting for that to happen. But when it creates the inversion fair value gap on the dive down below the weekly low that it took, their sell side has been engaged, and the market has showed a willingness to want to go higher. If the gap, in this case it would be a SIBI, forms on the leg down before the stop hunt below the weekly low, once that forms, if price goes back above that, you want to see that always act as an inversion fair value gap. If the market doesn't come back to that and still keeps going higher, it can stay open. It doesn't have to trade back to it, but if it does, it must act as an inversion fair value gap. If it fails, then you have to abandon the bullishness until it proves it again. That means you have to make another lower low. The retracement question you had, how far would it retrace? It needs to stay obviously above that inversion fair value gap because it's a market maker buy model that's forming there. If you understand the schematic I outlined for the market maker buy and sell model, these retracements in the smart money reversal, the low risk entry, that low risk entry has to form above the turtle soup buy below the sell side liquidity that was taken in the weekly chart. So now you have two pieces of the puzzle right there. So now, would you expect the first stage accumulation, which would be the most deepest retracement that forms after it runs up a little bit in price, would you expect that to trade down into the same area that the low risk entry would be?
No.
Right. So to answer your question is they have to stair step up. The smart money reversal has to be the low. The curve starts on the buy side now. Then you have the low risk entry. And then the first stage accumulation will trade down into a PDA, right? Fair value gap, inversion fair value gap, something to that effect. That's going to form higher than the low risk entry. Then once that first stage accumulation forms, when it rallies, the second stage reaccumulation cannot share the same space that the first stage accumulation took place. So it's just a stair step, higher and higher and higher. So it's all based on the scale in which where these things fall in line on the price action at the time you're looking at it. But they cannot share the same space. They have to be higher each time because it's building without drawing trend lines, without building support and resistance ideas. It's simply stair stepping higher and higher and higher, and it becomes an obvious mechanism to anticipate where this next price leg is going to form. In the second stage, accumulation or reaccumulation will be the biggest driver higher, and it doesn't spend that much time down there. The first stage accumulation can stay around a little bit, hang around a little bit, and maybe do another little whip into its first low, but not share the same space of low risk entry. The second stage reaccumulation is a one and done, out the door, goodbye, Elvis has left the building. How much it retraces is all pertinent to and salient to what is in the chart you're looking at the time. It just simply can't share the same space.
Okay, thank you.
You're welcome.